It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, August 31st, 2015. Do not adjust your television sets, kids. This is the last day of the month of August. That's summertime 2015. Just poof, and it's gone. This weekend, going into a Labor Day holiday weekend. We get a short week in our hands here, guys. We got our make our money here this week. Friday, we do have non-farms, but it's going to be one of those quarter day Friday mornings. So we got 4 days this week. I want to make sure we get at this here and make our money before this holiday weekend sets in. I got a jam-packed newsletter in store for you. Crude is bullish here, right? Holding the pullback from last week. Spike in channel today. Everything else, though, pretty much nothing but sideways. We've got a lot of ranges we're dealing with right now, which you know me. I'll take a trading range scenario all day long. I can't wait to talk more about it. Stay tuned for the charts and the strategies for tomorrow. Before we jump into our charts for today, though, I do want to remind you guys, make sure you're watching the video on our trading blog here at sidewaysmarkets.com. Bunch of reasons why it's in your best interest to watch this stuff on our trading blog. First of all, you can grab a free pass, come out and test drive our live trade room as a guest. If you're not a member of School of Trade, grab a free pass, upper left-hand corner, lower left-hand corner, right above my ugly mug. You'll see a spot for your name and your email address to join our nightly newsletter mailing list. I'll shoot you an email every evening when the newsletter's ready. Right below the video tonight, you'll see a link there to download the charts you're going to see me using in today's video newsletter. Right? Don't wait around. Grab those charts, have them ready for tomorrow. And then over here on the right-hand side, you get a link here to join our free trial. Get more information about what it means to be a member here at schooloftrade.com. And, of course, don't forget, you can also read member reviews. And we always have someone standing by 24/7, 365. Yeah, even Labor Day weekend, we'll have someone standing by here to answer all your questions. Boy, hope you guys had a great weekend. All the parents out there shipping the kids back to school sometime this week. It's a beautiful thing, isn't it? I guess it could be good and could be bad, depending on what you did this summer, right? Anyways, enough about that. We got a newsletter in store for you guys here today. We'll talk more about everything else here at the end of the video. How about we jump into crude? First things first, crude oil is bullish with just a little spike in channel pattern that tells us to expect a deep correction off these highs for the best buying opportunities, as well as a possible big buyer failure, possibly all the way back to that trading range that we came in this morning. This morning was a classic case. You know, kids, when we talk about, we've probably all heard that term before, a short squeeze, right? Short squeeze. What is a short squeeze when it comes to futures trading? You know, they use it in different ways. A short squeeze is exactly what happened today. So you can pretty much guarantee that everybody here saw this big high print from last Friday and said, this thing can't keep going higher forever. It's got to come back down, right? Probably down to 40, and then it will go higher. So what did they do? They sold short. And where do you think their stop losses are going to be? Right about there, right? So once we saw breaking through some of these swings, that's what led to the velocity of this price movement. Boy, I'll tell you, you combine market orders, because that's what stop losses are, right? When sellers get stopped out of their trades, right? Buy. But they're buy at market, which means whatever's available, right, to be filled, that pushes price higher. And then, of course, you've got all the speculators that are seeing this happen in real time. We were on the bull side as well this morning after we saw it happen. And we, of course, throw more fuel on the fire, with a pun definitely intended. So a short squeeze. Sellers are selling off of these highs from last week. And as soon as that price starts tipping the scales here, breaks through a high here, people get stopped out, breaks through a high here, a couple more. But in my opinion, once we ran that 46 area here, it got ugly. It got ugly, and you saw it, right? It felt like it. It felt like somebody put a string on and just whoop right back up. Because for the majority of the morning, we were nothing but bearish until we saw, to be honest with you, once we got about halfway through that trading range this morning. Members, if you're with me in the trade room this morning, know exactly what I'm talking about. We trade a much faster time frame than this in the trade room each morning. But once we got about 44.50, we said, all right, this is not looking good here anymore. We had a measured move coming off the highs. It was a measured move right to the tick, pretty much. $1 off the highs from 45 to 44, and then all of a sudden you could just feel it. These bulls just were not going to give up. On a faster time frame, it looked a little bit more interesting. On this one, you can see what happens. So the short squeeze kicks on, we get a wave count reset on it, and this thing just takes off to the upside. And remember, guys, this is that time when you look at the chart and you go, holy smokes, look at that straight line. Oh, spike and channel, flag pattern, pennant pattern, right? Right when your mind goes, whoa, that's a really strong, you should immediately now be thinking spike and channel, flag, pennant. We talked about this last week, right? Okay, so we know we have a spike and channel. The spike and channel has 4 major aspects to it. There are 4 pieces to this spike and channel. A spike and channel is in the same category as a flag pattern, as a pennant pattern. We talked about this last week, right? Back at the beginning of the week last week. Go back and watch that one, or just come out and join as a student here, and I'll teach you everything I know in my 15-year career here. Well, spike and channels, these are screaming strength. These are screaming strength. So, 4 parts of it. The first piece is going to be the spike. The spike is outrageous. It's out of the norm. It's obvious. And normally with a spike, you're usually clamoring to find other levels and going, wait, what's going on? There's nothing else. When I catch myself going, what in the who? That's when I always think, is there a spike in channel? Because usually that's when it shows up, right? Because again, the first piece of this is that spike. It is just, it's alarmingly strong. It's so strong that it really kind of confuses a lot of traders. At least it did for me for a very long time until I realized, wait a second, the minute I start seeing that straight line in the chart, it's probably a spike in channel, or it's a flag, or it's a pennant. Bottom line is, though, we follow the direction of the spike. That's the first clue. The second clue is this lazy channel. Now, this lazy channel is the first part. Well, I'll finish it and I'll go back and recap. The lazy channel. This lazy channel is a frustratingly lazy channel. In fact, the lazy channel, in my opinion, is so lazy, right? It's so I could tell a million jokes right now, but I won't make you sit through those bad jokes. It's so lazy that it makes you think, wait, didn't I read somewhere big pops equal big drops? It doesn't feel like these buyers still got it. Lazy channel is the second piece of it. The third piece, which is what, in my opinion, the most difficult piece, the third piece to it is that after you get the Sunday afternoon, manana style lazy channel, and you're thinking, man, these bulls don't feel very strong anymore. That's exactly what they want you to think. Because now the third piece is the deep correction. Okay, now this deep correction is a really big deal because it's such a deep correction that a keyword here is deep correction. It's uncomfortably deep. God, I could segue. Anyways, so the deep correction now, usually, no guarantee here, but usually is going to go back here, to that beginning of the channel, maybe a little bit lower, right? Okay, deep correction. When you combine the deep correction with the lazy channel, what ends up happening is most new traders go, we're going back to the lows, right? We're going to go back to the lows. Let's be a seller. And that's where you get caught. This is one of the trickiest patterns because of that, because it's almost like it just reels you in with that lazy channel. Don't worry about me. I'm just a lazy buyer. Nothing to see here, folks. And then the deep correction comes off the high, and the bears in the market go, oh, this is perfect. We had that big move higher, and now we're going to go all the way back to the beginning. You might as well just save yourself the trouble and pay me now. And then guess what happens? Yeah. See ya, suckers. In comes the fourth part of this, which is the ABCD correction, right? This is the stick it down your throats. You shouldn't have second guessed us, right? That type of attitude, that it feels like it. Really what's happening is the sellers who take the bait are getting stopped out, and they are so upset with themselves. They're reversing their short positions. They're buying after their short positions, right? And so now you get the fourth piece of this, which ends up being this A, B, C, D. Guys and gals, if this is the first time you've seen this, print this out, stick it on your fridge at home, because this is one of the easiest ways we make money every day. It happens in the short term, the long term, and the every term. Why? Because, well, the way that I trade is based on crowd psychology. It's the one consistent thing that we have to work with here as traders. I don't care what you're trading. Groups of people do things very consistently. We know that. The spike up tells you, stay in that direction. The lazy channel says, man, what's going on with these buyers? Why are they taking so long? Then the correction is when it traps you all in. The correction is when you get the trap, the bear trap. The sellers are trying to sell it back to where it came from because they read somewhere, they heard from their brother-in-laws, sisters, next door neighbors, pizza guy, that big pops equal big drops, right? Not this time, though. This is a deep correction. Now, what if this fails? If this fails, sometimes this pattern does fail. It's relatively rare. Didn't happen today. Didn't happen last week. What if it fails? It goes all the way back to the beginning of the spike. That's relatively rare. Okay, so the spike in channel, very consistently, you get that lazy channel, deep correction, and then watch out, bam, all the way up. So the way that I like to trade it is I like to catch those sellers on the wrong side of this. So I'm looking to buy the move after the deep correction. Now, sometimes we don't get that. Sometimes it breaks below that low, and then all of a sudden you see the sellers try and fail. What I'm doing on this pattern, make it very clear, is I'm looking for the sellers to try and fail here. I'm not looking to buy it, because if you try to buy it, you're not going to get the signal. It's confusing. So you wait for the sellers to fail and take it higher, buying into their stop losses. Okay. Then if it keeps going lower, now you know. Now you know you're hunting for that flagpole, right, or the beginning of the spike. Okay. Now you know what you're looking at now. I know that was a real long-winded way. I tried to rush through it, but you can't rush the good stuff. So here we are now, and this really is the good stuff. Here's my spike up. Here's my channel. You can see it's pretty obvious. Right? You can't draw a channel like this, right? That's not going to fit. You're not going to draw it like one big ramp. I mean, you could, but, again, it's a spiking channel. So where do we expect the deep pullback to go? Oh, first of all, what am I looking to do? I'm going to be a buyer here. The only time I become a seller, in my opinion, is when we can get below this area right here, because this, in my opinion, is kind of that line in the sand where I'm looking for those sellers to fail so I can buy it. And then, of course, if they can't, then it goes right back down in. I threw a little bit of volume analysis on this chart, just going to illustrate it. You can see we got a nice, big, strong volume cluster open up the week here, right around 44.5. That's your target, sellers. But don't you dare sell this thing here, again, until we can break and hold down, until we don't get that completion after that deep correction. This is a pattern you really got to wait patiently for. So right now, I'm firmly on the bull side here right now because of the spike in channel. I think it's pretty obvious, too. I don't think you'd have to be a wizard at this stuff to look at this crude market the past few days and go, something has caused this market now to be extremely bullish. And I've only said that probably a handful of times this entire year. So definitely we're seeing, call it a short covering rally, call it speculation back to 50. I don't care what you want to call it, but we're definitely bullish right now, which means every time this price goes lower here right now, and again, my line in the sand, like I said, expect a deep correction back to the beginning of that channel. So we're talking right about here, 46.50, give or take a few ticks. I'm not going to be perfect on that, but I definitely know it's going to be around that 46.50 to 47 even area. So wait patiently for it here. And then from there, I've got some targets waiting for us. It's really difficult for me to project this into the future because, again, we're looking for a deeper correction here. So these are unconfirmed, but I'll definitely be looking for measured moves, right, as we go higher with the big daddy of all measured moves here. Again, I don't know how far it pulls back yet, right? So kind of guessing there. 52.50, 50.50. I'll tell you, $50 a barrel sounds really tasty right about now. And also, too, don't forget, a deep correction is not a guarantee. It's just typical. So if we see this thing tomorrow morning coming out here and it's already pushing higher here, just you keep buying those pullbacks, seller failures, and again, that's the plan. Guys, tomorrow morning, we'll be trading this in real time tomorrow. Come out and see us. You don't have to go at it alone. And then I'll tell you, the rest of this newsletter is a whole lot of this. Trading ranges. Now, here we have a flag pattern in the S&P. So we do have a flag, but it's a range. And one of the things that I want to point out is when you see a trading range, that's your most important clue. We talk about this all the time in our trade room, right, guys? When you see a trading range, flat moving average, double tops, double bottoms, everything else really is secondary to the range itself, the range expansions, and those first two tries. We know the markets love to try twice. So when we find a trading range, we're looking for two tries and to stay out of that range before we even think about trading the breakouts. Our plan right now in the S&P until, well, let's maybe we should just read what you put on the chart here, JJ. I never said I was the smartest guy in the box. All right, S&P trading sideways inside a range, which means we will fade each breakout using failure patterns until we see the buyers or sellers, and here's the most important part, until we see them successfully hold outside the range after two attempts. Now, I am only giving you the fundamentals of this. I teach this as a science to all of our students here, and it probably is one of the most consistent things we do as traders when we see trading ranges. Okay? You need to understand the markets are generally moving in either trends or ranges. Crude's in a trend. S&P's in a range. I really don't care about anything else besides there are ultimately three things you want to think of right now. One is the trading range. Two is the range expansions. And three is going to be fade every single attempt to break out of this range with failure patterns until what? Until we see two tries, and after that second try, we stay outside of it. Now, again, I'm only giving you the fundamentals. I'm not going to give away my life's work on YouTube, right? We get thousands of viewers every year here. I'm not going to give you everything, but I will give you some of the basic principles of this range. Okay, you can see, for example, I get my first try right here, right? So you got the first try to break out, and it looks like they're making a first try to break out to the downside right now. Okay, so two tries to break out of this range. If the second try stays outside, now we'll go in that direction. Members of mine, you know what I'm speaking to you. Now, as you can see, we've got levels above and we got levels below. Use those levels above, use those levels below as support and resistance, and we're looking for failure patterns. I've got a handful of my own favorite failure patterns, and I would love to teach them to you. Come out and join me as a student. We'll kick some butt together using failure patterns. If you've got your own failure patterns, use them. But right now we have a trading range. Remember, this newsletter is going to give you direction. It's going to give you ranges. It's going to give you areas of support and resistance. If you're looking for real-time trades and exact entries and exits, that's what my live trade room's for. I keep getting that confusion on this newsletter. Why aren't you giving us real-time? Real-time? It's like 10 o'clock at night right now. You want real-time? Come out and see me in the trade room. I think it's common sense, and I'm sure most of you are going, who thinks this is for real-time stuff right now? Anyways, this is not real-time trades. These are support and resistance levels, basic what I call market structure. Tomorrow, we're going to come in and trade this together, though, in real time on a much faster chart time frame. Don't forget, you can have all those charts. Just download them below the video. Another trading range here now on gold. This one's a little bit more, well, you can see it's a little bit more on this chart. Now we're going to have a price wedge involved here. A price wedge is the exact same thing as a trading range. You can kind of see that wedge high coming down at the top, wedge low coming up from the bottom. It's a relatively wide wedge. You might be able to do it something like that. You know, this might be a little bit more accurate, something like that. It doesn't matter, though. It really doesn't. Again, gold, same thing as the S&P, and really it's the same thing as the euro this evening. It's range bound. It's trading sideways on this final day of the month, which means our plan is to sell highs, buy lows, don't fiddle with the middle, right? Stay away from the middle and look for failures of every breakout until we see the buyers or sellers successfully break from the range and pick a direction. Remember, they're going to try twice. And after they try second time and we see price stay outside that range, that's my green light, right? Or my red light, depending on what direction you want to go in. You can see here we've got a first try down at the bottom, right? So there's your trading range. Sellers try once, back inside. Sellers now, or buyers now trying once, back inside. Once I see which direction we're trying to go in, then I'll take that breakout seriously. But until then, every time it goes up, failure back down. Every time it goes down, failure back up. And again, you can see the levels of resistance above and support below. I have a handful of failure patterns and reversal patterns and continuation patterns that we teach here at School of Trade. I like to think they're the most reliable ones, long-term probability-wise, right? Or use your own patterns. Bottom line, though, is we'll be watching this chart real time, a much faster time frame chart, obviously, on that. And then again, if you were to look at volume on this right now, you are literally, volume is right there, smack in the middle, so you're balanced. So the higher it goes up, the more enticing it is to sell it back down. The lower it goes, the more enticing it is to buy it back up until we see what? 2 attempts to do so, and we stay outside that range. Don't forget, remember mine, inside your intermediate course, you will see a full chapter on trading ranges where we get all scientific, right? All very mechanical way that we use trading ranges. Now, wrapping up here with the Euro FX, the 6E, not to be confused with the Forex pair. I do not trade Forex. You can do much better than that, guys. A regulated industry with a buyer and seller for everything without a spread. Do you guys realize how expensive it is to trade Forex? You know how much one pip is, right? $10. You know how much commissions are on the Euro? Like $4 and change. Yeah, it's really expensive trading Forex. And you get horrible tax ramifications. Trade futures. Well, do whatever you want. But if you want to get the best business model, futures is superior to Forex. Really, the only people that should be trading Forex are major bankers or large asset managers that need to hedge themselves against currency risk, right? Currency risk. That's what it's built for. It wasn't built for day trading. Bottom line, Euro, trading inside a range, which means our plan, I know, same thing here. Our plan is to wait for breakouts and fade each breakout until we see how many tries? 2 tries. Now, this Euro is looking like a dog right now. It hasn't even tried once yet to break out of this range. Very, very easy to see we're in the middle of the range here. And as you can see, I got a little volume overlay on it. Guys, I don't use volume for entries, but I will definitely look at where the volume is on this longer term chart. Honestly, do you really need the volume profile on here? Hell no. Look at the flat moving average right in the middle. That's where the most amount of trades are being done right now. But in case you do want to see the visual illustration, we have a trading range, we have a price wedge. This is just, it's quite easy to see here. This market is completely balanced here as we finish up this month. The higher it goes, the more enticing it is to sell it back down. The lower it goes, the more enticing it is to buy it back up. Now, here's a really good example. We talked about this earlier. When we see a trading range, the trading range is the most important aspect, right? It is. It's the most important aspect. Notice how I've marked up the A, B, C, D. This is all fine and dandy, but in all reality, what's more important is that this is a range expansion. It's nothing more than literally a copy and paste job of that trading range. That's all it is. So one of the lessons I hope you learn in this newsletter tonight is when you see a trading range, forget the channels, forget any possible short-term trends, focus on that trading range. I also hope you learn more about the old spike and channel here we're seeing on crude right now, because that could send us either much higher or much lower, right, if it happens to fail. I'm going to err on the side of the bulls here for crude until that spike and channel fails, though. So on the Euro, fade those breakouts. On the S&P, fade those breakouts until proven otherwise. On the crude, well, you know what the plan is on crude, right? We're looking around that 46.5 area, right? Beginning of that channel. That's where you're going to get the best buys at. And then again, If we fail, whoops-a-daisy, go back to that 44 here for tomorrow. And then, of course, on the gold here, I could probably draw in this little wedge here as well, kind of call that a shorter-term price wedge. Again, it really doesn't matter. As the price goes up, we sell the highs. As the price goes down, we buy those lows. Using what? Using failure patterns. Failure patterns. Guys and gals, thank you so much for being here with me. I can't believe we're finishing up the month of August. Don't forget, we get a short week this week. Friday is non-farm payroll Friday. It's the first Friday of every 1 month. That is this Friday. However, it is the Friday of Labor Day weekend. I can already smell the barbecue grill getting cleaned out back. I can smell the boat exhaust. You know the parties are getting warmed up here for this weekend. This is one of the biggest party weekends of the year in the United States. It really is. 4th of July, New Year's, Labor Day. This is, it's going to get almost as nutty as Black Friday out front of a Walmart, right? I'll tell you that much. Guys, don't forget, join the blog there at sidewaysmarkets.com. Download today's charts, and if you got some free time here, we have the best free trial in the business. I can guarantee you that. I take a lot of pride in the fact that you're going to learn more with me in 1 week of my trial than you will anywhere else on the interwebs. And, of course, we've got beginner, intermediate, and advanced levels of membership. That way, whether you're brand new to the day trading industry or you've been around for a while but you still haven't figured out how to make money with all the information you know about this, guys, remember, when it comes to being successful in anything, success is like unlocking a combination lock. It's not enough to have the numbers. You got to have the combination and the technique of using those numbers. Everyone seems to know what a trend line is. Do you know how to use them correctly, though? That's the difference between working with a professional and just reading the dictionary. Guys and gals, don't forget, I got someone standing by 24/7, 365, and I really hope you give me the chance here to prove it to you in my free trial. Come on, join me in the trade room. Grab a free pass. And I think I'm too late here now. This video's going on too long. My name is Joseph. We'll see you same time, same place tomorrow. 8 a.m. tomorrow morning on the trade room. 8 p.m. tomorrow night for the newsletter. Don't forget, short week here. We'll see you next time. Adios, amigos. Bye for now.